Hi everybody, this is Osprey from MyChartCoach.com, and in this video we're going to take a look at some of the top percentage gainers from Friday. Friday finished strong. There were a lot of stocks that were up big. We're going to take a look at some of the best plays from Friday. First up, we're going to take a look at PXS. Okay, so it had a really nice move. It made a big run, but it did pull back, and when it pulled back, it did form a long upper wick on Friday's candle. So if we look at the PXS chart here, you can see here it did close up 83 on RSI. Fasto is just getting going here. It's just above the 20 oversold line, and so yeah, so the big move on Friday was the break above the 300-day simple moving average. That's this blue line here. As you can see, the stock had been trading in a very tight channel for quite some time. You can see here, these are the Bollinger Bands. The solid purple line on the bottom is the lower Bollinger Band, and the solid purple line on the top is the upper Bollinger Band. And here on the 27th, the candles broke out to the upside. Okay, so if they pulled back, held middle Bollinger Band support in the 200-day simple moving average at 180. And then on Friday, there was that big breakout higher. So it is signaling more upside potential, but the candles could work their way back into the bands first. If you look here on the candle on the 27th, when it closed above the upper Bollinger Band and formed the long upper wick, there was a gap down open the next day, and the candles consolidated for 3 days. And so you could see a similar move here, more consolidation back into the bands. If that happens, the first big support level is down here at EMA4 at 285. So that's going to be the big level to hold, to keep the chart super bullish. If the EMA4 breaks, the chart's still, in an uptrend, but the risk is it could drop down here to $2 and test the middle Bollinger Band and the 300-day simple moving average at 207. It needs to stay above all these levels to keep this new uptrend going. There was really big volume behind the move, and there was a big parabolic spike on MACD on both time frames, which is an unsustainable move. It can't keep that trajectory for an extended period of time, but it could push higher. The red flag is accumulation distribution and shaken money flow. As you can see here, there was a giant spike down on accumulation distribution on Friday, and CMF fell to form a green histogram bar. So what this is signaling is bearish divergence. Even though the share price was up on the day, it closed at 410 after starting the day way down by $2, and it closed up 102% on the day. CMF and accumulation distribution spiked down. So that is a red flag signaling dilution and shares being sold. And so if you look here, we had posted, this is the weekly chart, the PXS weekly chart, and so you can see here RSI now is above 80, and you see the big parabolic spike on plus DI. So when you see that is unsustainable. It cannot keep that vertical trajectory for an extended period of time, and so we did put out alerts on Friday that we knew exactly the level that it needed to stay above, and that was right here, the opening price in November. So this is the beginning of trading, and this is the very first trade in the history of the stock here for the this is where it all began, and so it needs to get back above that level. That's the November opening price, and it's the high here in November, and it did break above it temporarily. It's about at around 430 or so, and it ran all the way up to $9, but it pulled back, and notice how it closed below that level. So that's going to be a key resistance level, along with the closing price here in June of 2016. So if you see the share price failed to get above this 430 level and then drop below this closing price here in June, which is around 390 or so, just below $4, that could signal consolidation. The downside risk is the first big support level on this chart is way down here at EMA4 at 274 for the moving average support levels. The close this week was well above the upper Bollinger Band. Sometimes the candles do work back into the bands. Notice that there was a break above this descending resistance line. This symmetrical triangle pattern had formed, and there was a big break above resistance, and the candles are now forming above the middle Bollinger Band and the 50 and 100 week moving averages. As you can see over here, the 200 and 300 week moving averages are undefined. So that 100 week moving average at 213 is the key level to hold. As long as the weekly candles are staying above that level, this uptrend is intact and super strong. You just could possibly see some consolidation before then. Now, if it breaks out and it closes above 430, that would be very bullish, signaling more upside potential. The resistance is just from this last week. You have well, it was going on a blue sky breakout last week, and this whole wick was uncharted territory. So that was a really bullish move. It just pulled back. It looks like they dumped into the run. So we'll see if it can follow through. What you need to do is follow the 15-minute chart. So this is the PXS 15-minute chart. You can see the run. So yeah, you had the tight Bollinger Bands, right, on Thursday, and then this break at the open on Friday. That signaled that it was in play. And notice how the candles just rode the pink line the entire time. That was EMA 4. Well, if you didn't sell, you know, if you were wondering when to sell, you know, there was this looked like a climax volume spike here at 11:45, but notice the candles kept pushing higher, and then and when that happens, I mean, what you're doing is you're waiting for a break below EMA 4, and you're looking for a red candle on the 15-minute chart, and that finally happened here at 12:30. So you had both happen at the same time. You had the red candle and the break below. You know, this was a signal that it was topping out when the red candle was forming. We did put out alerts that 9 was looking like the top, and that did turn out to be the top. Once it closed below EMA 4, it started cruising downhill, and you could see here at 1:30 it broke below the middle Bollinger Band. So the close on Friday back above EMA 4 you know, it was a good close after the big drop below, but it closed below the middle Bollinger Band, so that is downside risk. It has to get back above that level at 514 in order to get the uptrend going. If it fails to get above EMA's 8 and 13 here, above 430, and then if it does break above 430, it fails to get back above $5, it could signal more downside risk. The big support level below is the 50 simple moving average at 344. That has to hold. If you see it drop below that, you could see a big drop down into the 2s. You have the 100 simple moving average at 278, and then at the very bottom you have the 200 and 300 simple moving averages at 222 and 232. So it's really imperative for the bulls that PXS gets back above $5 on Monday. Okay, so let's look at TGC. TGC had a big spike and a pullback, very similar kind of action. You know, RSI now is above 70, Fasto's above 50. It was lowered because of the long lower wick, but this actually closed, you know, well above the open. The long upper wick wasn't as long, so it wasn't as bad as the other candle, but it's still, you know, this is one of those thinly traded stocks, and so you have to be really careful. You know, when the volume is there, the stock's in play, but when the volume leaves, it can be very difficult to sell. You can get stuck holding the bag. If you look down here, look, there's hardly any volume on days when it's not trading well. And so yeah, and if you notice the each of these volume bar days where it has a nice volume bar, that's accompanied with a white candle with a long upper wick. And so what that's a sign of is each time that they have a little pop in volume, they're dumping shares into the rally, and that's why you keep having this sideways pattern here. Now it did break out above the top of this channel here, so it broke out of the top. The close above the closing price back here in July, what was you know, signaling more upside potential, but you know, you do have the close well above the upper Bollinger Band and EMA 4. You know, it broke above the blue line here, which was the 300-day simple moving average at 688. If the candles do continue working back into the bands, you know, you have the upper Bollinger Band at 788, and then you have EMA 4 as the first support level way down here at 744. Notice the upper Bollinger Bands lined up with the closing price back here in July. You want to see that level hold on a pullback. So it's really important that the candles stay above 78. You know, the big moving average to hold down here is the 300 simple moving average at 688, basically 69. So to the upside, you know, you want to look at a longer time frame to see where this could be breaking out to. And so if we look at the weekly chart here, you could see that there was a really nice break above the 100-week moving average last week. There was a nice close above that level and above the 50-week moving average. Okay, so the green line is the 50-week moving average. It also closed above the middle Bollinger Band, so 65 and 66. And then the close above the 100-week moving average was super bullish at 89. It needs to stay back above that level this week. If you see it drop below 89, that could signal consolidation, and it could drop down here to test that 50-week moving average and the middle Bollinger Band. So basically the 60s could be on deck if it fails to stay above 89. If it does stay above 89, then you could be talking about, you know, trying to get above dollar land here. There's a cluster of candles right here in that 130 zone, and then the next big moving average is way up here at 211. If you look at the 15-minute chart here for TGC, you could see how it had the big what we call a flagpole, okay, and then it formed this little flag off of here, but it broke down as opposed to breaking up. You know, it never got above high close horizontal resistance. You know, it broke above the first level. All right, and then it didn't get above the second level. You can see this candle here failed to get above. It basically climaxed at the open here, you know, with another little push, and then you have the climax volumes upper wick. You have the pullback from high of day, right, and then you have the big volume spike beforehand, and then you have the red candle, you know, followed by a red candle, and these forming above the upper Bollinger Band. You know, it signals that it was frothy, and the candles did work back into the bands, and so basically, you know, the middle Bollinger Band broke, and then it got back above at the end of day. It has to stay above that level. That 91-cent level is the big level to stay above. If 91 cents fails to hold, you could see a drop down here to 79 cents, down to the 50 simple moving average. So, but if it stays above 91, then you have $1 back on deck, and then this $1.14 close is the big level to get through. So yeah, so it's really important that it stays above the middle Bollinger Band on the 15-minute chart on Monday. Let's look at OHRP, another big winner. It closed up 50%. You know, it's got RSI and Fasto at overbought levels now. It broke out above the 300-day simple moving average on Friday, so that's at 122. And so basically, you know, 122, 123, it needs to hold that level. Okay, so if it drops below 123, then that could signal consolidation. You have EMA4 way down here at 101. So the candles could work their way back into the bands before the next push higher if it fails to stay above 122. If 122 holds, it could push higher. Notice there was a big volume spike, you know, on Friday. This stock has much better volume than TGC. All right, if you're trying to compare the two, it has better average daily volume. It's always important to look at the average daily volume of a stock. You know, you want to, you know, you can trade them when they have the big volume, but then you want to be gone when the volume, you know, before the volume dries up. Yeah, you just be very careful with low volume stocks. So OHRP here made a bullish move in the weekly chart. You could see here it had been trading in a sideways channel, and then finally this week it broke out above the top of the channel. So that was a really nice move. This is what all the bulls were looking for, and I have green lines here, but you get the point. It broke out above key resistance levels, and the close above the 100-week moving average or the 50-week moving average at 85 was very, very bullish. It actually gapped up open above that level, pulled back, and then ended up staying above it and closing really high up here at near 130. Okay, so now it's got some resistance up here where you have a cluster of candles. You know, you have the 150 zone as a key level to get through. You know, you're gonna have some little resistance here in 140, but if you can get through 140, 150, you know, it busts through those levels, you might see a run up here to the 100-week simple moving average. That's the next big target at 193. So if this uptrend continues, you're looking for a push up here to $2 and a break above that 100-week moving average. If the candles work back in their bands, you need to see that high close at top of the channel. You know, the high close here at 85, the top of this multi-month sideways channel here at 80, and then you really want to see it stay above that 50-week moving average. Okay, let's look at WAC. Nice move, closed up 36%. Okay, this actually has RSI in the bull zone. Notice how it's only at 59, so it has juice to run. It still has room to run until the 70 overbought level. Fasto is still below 80. This stock has a hard time staying above 80 on Fasto, so it's right up at the key resistance level. So look here, this gold line is the 100-week moving average, currently at 50 cents, almost 51, and then you have the green line here is the 50-day simple moving average at 475. It closed above that line. That was very cool. You know, that was crucial to get above the 50-day simple moving average. But it failed to stay above that 100-day simple moving average. If you see a close above 51 next week, that should signal that it wants to head higher. And then we're looking at the high close level to break is right here on the closing price on the 20th. And then so that's like at around 73 cents. And if we get above 73 cents, you could see a run up to Dollarland. That's the bullish implications here with a break above the 100 simple moving average is a potential run to Dollarland and that 200-day simple moving average at 98. That would be the target if it breaks above. failed to get above these two levels, that signals more consolidation. And with this stock, you do not want to be holding when it's consolidating. You could be holding for a while. As you can see here, when it failed to stay above the 100-day simple moving average, it pulled back. It failed to break above the 50-day simple moving average. It consolidates for weeks. Okay, so if it breaks above, maybe you can get a new uptrend going. It's closed above the middle Bollinger Band for 2 out of 3 days. It's trying to get a new uptrend started. Close above the 100-day simple moving average would be a signal that it wants to head higher. The promising thing is the big volume spike. You have a recent PSAR bull flip, and then you have recent bull crosses on MACD. So all the signals are pointing towards WAC wants to head higher. It just has to break that 51 resistance zone. Okay, let's look at AMPE. This stock it has been on a really nice run, and then it pulled back. It had 4 days of consolidation with a really nasty pullback on Thursday. And when it pulled back on Thursday, it had a really good bounce off of the middle Bollinger Band. So keep take note that the middle Bollinger Band is the bottom of the bullish upper Bollinger Band channel. Okay, so when stocks are trading in a strong uptrend, this is a chart that we've been working on. So sorry for the prior annotations, but yeah, when a stock is in a strong uptrend, the upper Bollinger Band is the top of the channel, and the middle Bollinger Band is the bottom. And so you always look to reload off the middle Bollinger Band if it holds. You can see here that the dotted purple line is the middle Bollinger Band. It held when it was tested here. It held back here. Now it bounced again off the middle Bollinger Band. This signals that the uptrend is intact. It closed right at EMA4 at 165. That is the big level to break. Now, if it can get above that level, then you're talking about the closing price here on the, what is that, 23rd. That's the big level to break, just below $2. So $2 is the big resistance zone. If it can get above 2, that's going to signal that it wants to head higher. When a stock is in a strong uptrend like this, you want to see it keep making new highs. That's a signal that it wants to keep the uptrend going. If it fails to break, it's similar to back here. You see how we were talking about we wanted to close above the closing price on the 18th. That was this candle. That happened right here. That signaled more upside. It took a little while for that candle to, or for that level to break again. You could see here, once again, you had another break above resistance on the 13th. Because this candle broke above this candle, the close above that signal more upside, and it headed higher. And you keep working your way up. Okay, so this candle here, it closed above that signal more upside. So if it fails to get back up and close above $2, that's a sign of weakness. It could double top and pull back. Okay, so keep an eye out for that. If you look at AMPE here on the weekly chart, you can see where it looks like it's headed. It did. It looks like it didn't quite form. It almost formed bearish dark cloud cover last week on the weekly chart, but it doesn't look like it's right on the 50-yard line here on whether or not this closed more than halfway into this candle. So basically the main thing is this uptrend is intact. Okay, I think that's the main thing to focus on if you're a long-term trader on the stock. It's been closing above EMA4 ever since it turned into support. You can see it broke above here, it pulled back, and then ever since it got above the middle Bollinger Band in September, it's been riding the pink line every single week. And so if you're a long-term swing trader, you can technically keep riding as long as that pink line is holding. If it closes below the EMA4, that's going to be a sign that the chart's breaking down, and then you could see a pullback, and it could test the 100-week simple moving average currently at 136. That is the level to hold. Notice it bounced off of that last week. If it holds onto that level, that'll signal more upside. Since EMA4 has been holding since September, a close below would be a bearish change in trend. That would signal the chart's cooling down. If it holds, now we push up our target for resistance, and so that's the $2 level. And so if it can break above the $2 level, then you're talking about the 200-week simple moving average at 255. That is the next target. If this uptrend continues, we've said that before, that's still the target. You want to see that 200 and 300 tested, similar to back here. It ran up to that levels back in 2016. It looks like that's where it's headed again. We'll see. If it closes below EMA4 for the week, then that's going to be a signal it's cooling down. Okay, this is the last chart for this. This is the last stock for this video. And this last chart we're going to look at. And here's AMTX. It closed above 50 on RSI and Fasto. It's just getting going. Okay, so this one's just going to go in. Keep in mind, low volume stocks, that is a red flag. It had the big volume spike on Friday. Yeah, so this isn't the best stock. It's got low volume. It had the volume spike. For you low volume penny players, if you see a break above the 50-day simple moving average at 78 cents, that would signal that it's in play. It closed above the middle Bollinger Band. It has to get above this level, and then if it gets above that level, you could see a run up here to test that 100-day simple moving average at 92. Okay, thank you very much for viewing this video. If you'd like to learn more about charts and technical analysis, come check us out in our new chat. I will post the link below the video. You can go on there. It's a free tool that you can use. We do offer premium channels, but there is lots of free content on there, and it's a mobile app, so you can get your alerts on the go. Okay, thank you.